Hello, and welcome to Wespath's Quarterly Review. I'm Frank Holsteen, Managing Director of Investment Management here at Wespath. My team oversees the management of all Wespath investment funds, and in this video, I'm going to recap the major news that impacted those funds in the first quarter. You've likely already heard about the biggest financial news story of the quarter, turmoil in the banking industry. These headlines started to break in March and were initially focused on Silicon Valley Bank, or SVB. SVB experienced what is commonly known as a bank run. This can occur when customers begin to worry about the stability of a bank and respond by rapidly withdrawing their deposits held at that bank. Remember, banks don't just hold deposits in cash at all times. They use some of their deposits for things like mortgages and business loans, and they can also invest some of their deposits in things like government bonds. When too many customers withdraw their deposits at once, banks can experience adverse issues if they're unable to convert their investments into cash to satisfy those withdrawals. That's essentially what happened to SVB. When rumors started to swirl that the bank was in financial trouble, a lot of customers began withdrawing their money. Ultimately, this caused SVB to experience the second largest bank failure in U.S. history. In the same week, we witnessed the third largest failure at another institution, New York-based Signature Bank. These failures created anxiety and uncertainty in financial markets. Soon, investors and depositors began to worry about other banks, including companies like First Republic and Credit Suisse. Luckily, though, it seems that the worst-case scenario was avoided through government intervention and industry support. The U.S. Federal Reserve, the Federal Deposit Insurance Corporation, or FDIC, and the Treasury Department came up with a plan to ensure SVB and Signature Bank depositors received all their money. First Republic received support from other U.S. banks, and Credit Suisse was purchased by longtime rival UBS. As for the impact on Wespath, our investments in SVB and Signature Bank were minimal and did not significantly affect the performance of our funds. And as of the date of this recording, we have not experienced any servicing issues with our custodian bank, nor the commercial banking partner we utilize to send benefit payments to participants. Still, there are some unknowns for markets moving forward. There will be a lot of attention placed on bank balance sheets, and these companies will need to instill confidence in their customers. But assuming further banking fallout is limited, investors are expected to continue focusing heavily on inflation and central bank policy. U.S. inflation moderated to 6% year over year in February, as measured by the Consumer Price Index, CPI. That's well below its peak of 9.1% just 8 months ago, but still well above the Fed's 2% policy. As such, the Fed is still raising interest rates and did so again in its March meeting. Investors will want to see whether the Fed will stop raising interest rates soon. There is some angst that higher interest rates will slow economic growth too much and hurt parts of the economy that are performing well, including the job market. In the first quarter, cooling inflation seemed to be enough to fuel optimism in financial markets. The S&P 500 index gained 7.5%, and the tech-heavy NASDAQ index soared over 17%. Stocks from both developed and developing countries were also positive in the quarter. So too was the bond market, which weathered some interest rate volatility caused by news from the banking industry and the Fed. Looking ahead, we know that investors will continue to closely watch bank stability and may even begin to worry about the U.S. debt ceiling debate. Beyond that, market movements are likely to be driven by inflation and central banks, just as we've been discussing for over a year now. Wespath continues to emphasize its disciplined long-term approach and looks forward to keeping you informed and updated on latest market happenings in the future.